Welcome to Spilling the Tea, the podcast where we explore the stories behind the technology shaping the future of privacy. I'm Lisa Loud from Secret Network, and I'll be your host today. This show is all about the real-world applications of confidential computing and AI, and how they're being used to solve complex problems in the world today, and also to protect our precious data, and unlock new possibilities for both individuals and enterprises. We're not just talking about theory here. We're sharing the journeys, we're sharing the challenges, and we're sharing the breakthroughs from the builders on the front lines. And today's guest is someone with a fascinating perspective. Joshua Allen Nelson is the founder and CTO of Mooncat AI, an LP intelligence platform for the superchain. Mooncat AI helps DeFi users look beyond headline APR by analyzing fee consistency, active liquidity, volatility, concentration, and rebalancing drag before they enter a pool. I want to hear more about drag. The rest of it I'm very familiar with. To my sadness, I know a lot about concentration and how it can work against you, but this rebalancing drag is really interesting. So before you enter a pool, being able to analyze that, can't wait to hear. The product launches with a dashboard-first approach and with bot-assisted position management planned next, which will be amazing. Joshua is building Mooncat around a simple belief, which is that AI should make liquidity decisions easier. Man, could I use that. While users remain in control. So follow at mooncat_AI for sharper pool reads, practical LP education, and building towards smarter on-chain liquidity management. So Joshua, to kick things off, let's start with your origin story. Let's spill the real tea on how Mooncat came to be and what drives you. What is your motivation? How did you get to this point?
Yeah, awesome. Thanks, Lisa, and I'm really glad to be here. So, I guess my origin story is I've been in quality assurance for a long time. I've also been in crypto for a while as well. Um, One of the things I found with liquidity pools, when they first started version one Uniswap, they were great. Over time, things started getting harder. More pools, stretched thin liquidity, impairment loss, volatility. All these things really started to impact the benefits of using liquidity pools. Like, I don't know, anyone that does use them, you put assets in, sometimes they're doing well, sometimes they're not. They give you base ranges that you can put stuff into to kind of be okay. But sometimes if the market gets too volatile, it can, you can lose it. So what we tried to do and what we are doing at Mooncat AI is fixing that. So there's so much data and so much information and so many pools out there that you can put assets into. It's impossible for one person to be able to consume all that data and know, right, what is that pool's gonna be from a strength perspective. And you look at all the different dexes and they post these massive APRs and concentrate at 2% here to earn this, but that's headline APR. It doesn't actually take into consideration some of that stuff like drag, IL, all that other sort of stuff we need to consider, right? So Mooncat AI, we've got, I think, nearly 400 pools that we're tracking across the superchain ecosystem. So that's 4 blockchains at the moment, 3 dexes. So across that, we bring in lots of different data across all these different pools, and we record all this information, and it allows us essentially to simply roll that up. And then what we do is we have our AI do deep analysis over all those individual tokens and pools, and then rolls it all up, and then looks at actually what it actually historically would have earned based on all of our data. In terms of taking into consideration IL, drag, and all that sort of stuff. So it's quite interesting. We've been finding a lot of cool stuff, like there are stablecoin pools that are quite profitable if you use them, and their stablecoins a lot more APR than what you can get, just putting your money in at a bank, So that it's definitely interesting, and it helps us remove a lot of the noise that we're now seeing. So. I think it's a great product. Yeah.
So, but what about your personal journey? How did you get to this point? Besides the fact that there was inefficiency and information asymmetry, what actually motivated you?
What motivated me? I saw a problem and wanted to fix it. You know what I mean? Like I use liquidity pools, and I'm like, why is my liquidity pool not earning me any money when this one over here is? And I didn't know about that one. You know what I mean? And so I needed to find a way um, to make liquidity pools profitable again, right? And so that's where this kind of I started working on it. Yeah,
Amazing.
yeah.
Yeah, I mean, and when Uniswap V2 came out, I was in the pools all the time. And I was, I tracked my APR. I was making 4,000% on some of those pools because you find the right opportunity, you get in there. Of course, it doesn't last. You've got to move your capital around. But some of those returns were, I mean, people didn't believe me. I tracked it, but people were like, no, you're not. You're not really making that much. But I really was. And then things started getting harder, just like you said. And it was like, oh, I've got to spend a lot more time. And then the sandwich arbitrages started happening more and more. And that was really that, like, so I guess my journey with that brings me to this question. My journey with liquidity pools, when V3 came out and the concentration, it was just a lot less interesting, because your impermanent loss could go so fast. You could get a totally one-sided pool in no time at all if you didn't set your parameters right. And at that point, I was just like, okay, this is just going to take more time than I have available in my spare time. I would have to either make this my full-time thing or I'm going to have to give up. And I gave up at that point. I haven't really been in the liquidity pools very much lately. So I guess I'm asking, does Mooncat really, do you think there's still profit to be made given how many people are doing arbitrage, how many people are draining pools one-sidedly, all of the hackers that are out there, um, watching your every move? Do you think that there's really opportunity still?
Yeah, it's an awesome question, Lisa, and it's why we're on the superchain ecosystem and not on like some of the older Ethereum layer one blockchains that are slower and does make that arbitrage easier, and the draining of those pools easier too, and front running and stuff like that, right? So essentially with the superchain ecosystem, we're talking sub-second block times. So it's very hard to front run transactions that are sub-second. It's not impossible, but it is quite more difficult. And Base, as a blockchain as well, has order of execution parameters and stuff built into it. So essentially, that helps protect some of that as well, so that people can't front run you on those blockchains, right? So that does even out the player field for liquidity pools, but it doesn't fix the issue on concentration ranges and one sided and all that sort of stuff. And that's why we needed to build a view that actually tracked us for us. Like having 1,000% APR is great, but if you're needing to rebalance that 3 times a day, and you're getting drag and IL loss as a result of that, then there's no longer value in that, right? You need to be able to stay within a range for as long as possible, and hopefully have that range bring you back to even pairing again, right? Because the more times you need to rebalance, the more drag you get, right? So that's part of all of our mechanics and maths that we have in the background being recorded and tracked across all the pools.
Can you define
And we
drag for
can
me?
see there is value. Yeah.
Yeah.
Sorry.
Yeah, that's the main thing.
Yeah.
Can you tell me what the definition of drag is?
Yeah. So, how we see it is when essentially you've got a liquidity pool. You need to rebalance it when you say you get to 90%, 95%. At that point in time, what's happened is, let's say Ethereum's gone down in price, right? In that period of time, you've now got 95% Ethereum in your liquidity pool. You need to swap it back to USDC if that's what you've paired it with in your liquidity pool. And in that point in time, you're swapping back 45% of your Ethereum at a lower price than what you brought it at. So you need to make sure that your fees that you're earning were higher enough to cover that drag.
Okay. So the difference between drag and impermanent loss is that impermanent loss happens in the pool and drag happens when you're getting out of the pool.
Yeah, that's right.
Okay. Makes sense. All right, cool. So, Yeah, that's great. What do you think is reasonable? You mentioned that there's stablecoin pools that have decent returns. Um, I guess I have two questions. What kind of volume is on on Superchain, on DEXs on Superchain, and then what are the possible returns?
Yeah, gotcha. That's a good question actually. Can I just bring up my most recent snapshot that I had that will tell me exactly what we tracked? Okay, let's have a look at our month view that we just posted on X. So across the nearly 400 pools that we tracked over the month of June, there was total value locked over that period of time was $271 million. And the volume over that 30-day period for those pools was $14.9 billion dollars. Yeah, over the month of June for the pools that we were tracking. Yeah.
Compared to Ethereum DEXs, how does that compare?
Yeah, definitely. So it is less, right? The superchain ecosystem isn't as big as Ethereum, right? So it's a lot smaller, but it is growing, right? And Base is big. It's supported by Coinbase, one of the biggest exchanges in the world. We do see a lot of opportunity with that superchain ecosystem. Yeah.
I'm not asking you to promise returns, but I'm asking you what range is reasonable for, let's say, someone who's a little bit sophisticated.
Yeah, gotcha. So at the moment, our calculations are showing that you can earn on reasonable pools with low IL and drag around. You're looking at about 100% APR, which isn't too bad. If you into some good pools, it's pretty good. You can double your crypto assets over that period of time, taking into consideration volatility and all that sort of stuff as well. So as long as you're in the right pools and you concentrate at the right percentages. If you concentrate too much, you'll get too many rebalances. If you concentrate too little, then you miss out on a lot of fees, right? So it's finding that nice sweet spot based on price movement.
So I guess what Mooncat does is, I mean, that's a lot. We've talked about a lot of complex concepts, right? And if someone is in DeFi, if a DeFi trader is listening to this, they're probably like, yeah, yeah, yeah. If somebody who's never been in done a liquidity pool provision, maybe they've done trades, but they haven't done provision, it's going to be a lot of jargon. So how much does Mooncat simplify that for people?
Yeah, and that's part of our AI, right? It gives a really simple analysis for each of the pools. It talks about current market trends that might be moving that pool or had an impact on volatility on that pool. Explain what IL and drag is on each of those pools in terms of what you would assume at the different ranges and time periods for that pool. And then it gives summaries as well. So our AI is kind of there to help explain and simplify it for people because even if I look at all the data that's there and I know the data across 400 pools, it's too much even for me to know exactly where to go based on all the variables, right? You need to be able to roll that information up and verify that it's correct, and then you can make your decisions based on that.
Okay,
Yeah.
so it takes the guesswork out of it and
Exactly.
helps
Yeah.
you,
Correct. Yeah. And helps explain it to users as well. Yeah.
right. And does it help protect against impermanent loss and drag and
I don't know if protect is the right word. Like, there's always things that can happen whenever you put money into a pool. It helps people understand what they're going into, right? Like, as an example, you could look at a historical set for a pool and say, look, this pool's based done quite well, and we can see that historically it's not because there's been an announcement or some sort of big thing that's happened that's caused it to be that way. So this pool seems to be performing quite well, but it doesn't mean that something's going to happen in a week that's going to cause volatility on that pool that would then cause more IL or drag than would be anticipated, right? We can't see the future.
yeah,
Yeah, we
right.
can only give you information based on the data and what it's telling us now.
Hmm.
Yeah.
Okay. So you guys actually got an interesting accolade from Certic. They named you a top 10 project. And security is a massive talking point in Web3 today and has been for a while, especially in DeFi. So Mooncat AI was recognized as a top 10 project. How important has that been to your community um, and to keeping user funds safe.
Yeah, definitely. So it's everything. You know what I mean? Like especially in crypto where the industry is plagued by like there's lots of things that go wrong. You know what I mean? And whether people have the best intentions or not, it's something that does happen. And so security is a must from the start for me. One of the very first things once we started building was I need to engage security. I need to make sure what we're doing is correct, that we have industry experts looking at it, making sure that it's safe. Yeah, it's our everything. I think from a pre-launch project at the moment, we're currently ranked about 3 or 4 on that CerTech leaderboard at the moment, which isn't like not too bad. We and we'll continue that.
That's impressive. And let's talk about governance a little bit. You say you have AI powered governance. Um, what, I mean, usually crypto governance relies heavily on manual voting and forum debates, and things can get quite messy during in any kind of DAO like structure. So, how does integrating AI change the game for community governance? And does it actually help to make things more fair and democratic?
Yeah, awesome. One of the things we're trying to fix with AI in DAOs is the participation rate and the understanding of proposals. I know a lot of DAOs, ones I've been in and ones I've read and looked into, you read the proposals, and sometimes even for me as a builder, I go, what does that mean? And so you need like they're very technical by nature. You know what I mean? Because it is a blockchain is a technical product. But it's what does that mean for the protocol? A lot of people that invest money don't understand blockchain to the extent that a lot of people do, right? The people that are making those proposals. So we use the AI as a an engine to provide information to people on proposals. It doesn't make proposals. It doesn't go off and do its own thing. It takes human proposals and tells them what that actually means and rates them from a DAO perspective and what it would mean for the protocol and tells people risks and issues potentially with that as well and what they need to be aware of. So that's kind of the purpose of our AI integrated DAO. It's to provide additional information to users.
It's not doing the actual voting for
No.
you. Okay. Um, and do you find that in practice, people tend to go with the AI's assessment?
Yeah, so we're still in pre-launch at the moment, right? So we haven't actually launched that DAO. We've got the test net up for people to have a look at and all that sort of stuff, and you can use tokens that we've got to do that. But we are pre-launch at the moment.
Yeah, I'll be very interested to see, because it's hard. I write proposals for our blockchain, and I try to make them understandable, but there's a lot of factors to consider, and people don't want to read 10 pages. So I think it's really interesting. But I also notice that people tend to vote like sheep, you know, and they tend to go with my friend said this was the way, if they participate at all. So it'll be really interesting. It's an interesting experiment.
Yeah, definitely. Yeah, yeah, you're right. Yeah.
So a big focus for Mooncat right now is driving strategic marketing. I guess you want to reach both DeFi degens and crypto newcomers and expand the pool of who's actually in DeFi. What has been your biggest challenge in building in like marketing an AI DeFi hybrid project? And what's your secret to building an organic, engaged community?
Yeah, awesome question, Lisa. I guess honestly, the biggest challenge is that AI and DeFi has become very noisy. Seasoned DeFi users have heard every promise around autonomous trading, huge APYs, and bots that somehow remove risk. Crypto newcomers hear terms like liquidity provision, impairment loss, and rebalancing, then switch off before they see real value, right? So at Mooncat, we're trying to fix all that by actually providing real headline APRs, providing that data out to people so they can see it and see that we're building and actually check it and measure it and actually build growth organically. Previously, we'd worked with some marketing companies from Mooncat AI, and it created a lot of hype and I'd like to say a little bit of noise, but not a lot of value for us. So we're trying to go the more organic route now from a marketing perspective. Show them that we're building, show them what we've got, and actually grow our user base naturally. That's what we're doing. So you can follow us on X, have a look at what we've got there. We have a Discord. You can see we're posting regular weekly, monthly snapshots now. You can see the APRs. We're giving it out for free at the moment. There's a lot of time, money, and effort that's gone into that data to get it out to people to have a look at. Yeah,
Mm-hmm.
I think there's a lot of value there, and we're giving it away for free.
Mm-hmm.
Yep.
Yeah, that's a good approach. And do you feel it's working, or are you still at the beginning waiting to see how it's gonna grow?
Yeah, we're still at the beginning now, right? So we've only just finished the data model and AI integration layer for the liquidity analysis. So that's now up and running. We'll be updating that into the website shortly as well. So all that'll start getting published onto the website. People will be able to interact with it, search through stuff, have a look at the data. But if you're a more simple user and don't want to get into all the technical views of that data, we have the headline APR cards that we issue from our X account that show our AI analysis and the true APRs on these pools across the superchain.
Yeah, okay, makes sense. I mean, it's a great grassroots is a great way to grow, especially the space is so noisy in Web3 in general. So it's hard to get attention. Um, I want to ask you about compliance. So a lot of Web3 projects, especially in DeFi, have been anonymous or decentralized with the ethos of, crypto. But Mooncat is a registered Australian business. And I'm wondering what made you decide to take the compliant and regulatory friendly route?
Yeah. So there's been a lot of move in Australia recently from a legal standpoint for DeFi protocols. It's quite positive. They are giving us a framework to work within, which is good. And the other one is we want people to know when we're not we're not another project that's based out of some island somewhere that potentially could do damage to someone or to something. Like we're in Australia, you can look up our business name and register details. They're on our website. We're not going anywhere. So we are a highly regulated and controlled country as well, which is part of I think the recognition from Certec as well, because they've verified all our details from that perspective too.
Hmm. Okay.
Yeah, and so we
And
want to show people we're here for the long haul.
yeah, that's great.
Yeah.
I mean, I think a lot of projects in the US and Canada would like to show that they're here for the long haul, but unfortunately with our regulations, we're not able to do decentralized pools. So I'm curious, in Australia, are you able to do decentralized permissionless pools without any KYC?
Yeah. So they're not my pools for people to allocate funds to, right? So I'm a decentralized protocol, right? So under the new laws for Australia around that, and we had some I had my legal team from Landers and Rogers make sure that we were okay from a regulatory standpoint. Essentially because we are a DeFi protocol, and they're not our pools that people are allocating money to, and we don't accept currently, although we do have a partnership with Banxa at the moment, we don't accept fiat on our protocol. So we're not converting fiat to crypto, and we're not converting crypto to fiat. We don't need to KYC anyone on our program, and the funds are going into pools that are not owned by us. So we don't actually have that KYC requirement.
So Uniswap was in the same position, and the US regulators went after Uniswap because, I mean, it's a different situation, different regulatory regime, but they could make the same argument that they were just providing the protocol. And so I just think it's a little more difficult here. I'm glad that there's a place in the world where you can actually set up a protocol and not be responsible for what people are going to do with it. So really interesting.
Yeah, no, I definitely. So in terms of responsibility, if I owned the liquidity pools, like my protocol was managing those liquidity pools and people were allocating cryptocurrency into them, that would be a different regulatory standpoint for me in Australia. But because they're owned by other decentralized exchanges, and I'm just providing analysis on that. At the moment, I'm okay. I will have KYC requirements if I go. We have a Bankster integration, so we can accept credit card payments, but we haven't enabled that yet.
I see.
So that
Yeah.
is a pathway as well. And if I do that, then I'll have to obviously make sure that I adhere to any KYC requirements as part of that.
Yeah, that makes
Yeah.
sense. That makes sense. You're not creating your own liquidity pools. You're working with, yeah.
No, no. Yeah, we're not a decentralized exchange ourselves. No. Yeah.
Yeah,
Yeah.
right. Yeah. But then the other aspect of it, which I ran into with one of my projects in the past, was if you create an AI that gives recommendations on here's where you should allocate funds, then are you giving investment advice?
Yes. So then I'd need to get an AFSL, which is an Australian Financial Services License. So there is an opportunity for me to potentially get one of those if I need to. I've got pathways to do that. At the moment, I don't need to, because right now we're pre-launch and we're also providing analytical data on the liquidity pools. We're not saying go and put money here and this is what you should do. We're showing adjusted APR, impairment loss, volume,
You're giving
total
data,
value, and
right?
market data on pools, right? So we're not recommending anyone to go into these pools. We're just providing information for people to make decisions on.
Right, which is totally fine, right? It's like Bloomberg.
That's right. Yeah, correct. Yeah, that's right. So, but I have been talking to my accountant. I do have options for getting an Australian financial services license when I need to. There's ways that you can share them in Australia and all that sort of stuff. So, I'm not too concerned about that. At some point in time when we launch, I'll obviously go down that pathway to get one. I know there are other cryptocurrency people based in Australia that have AFSLs as well, like AUDD and stuff like that. AUDX are some of those as well. Some of our stablecoin ones. So it does happen a lot. There are options here. It's great that Australia is getting a little bit more crypto friendly, which is great. So they're providing us a regulatory framework that we can work within.
That's amazing. What do you think caused that shift?
Um, Look, I think it's the value of the technology, right? Like I'm a big believer of cryptocurrency, decentralization, security. I love it. It's a great idea, and I think traditional sort of fiat cash has got its problems. And crypto has problems too, but fiat definitely. Yeah, so I think the government saw the opportunity, maybe even just because now they can tax it better. Maybe that's
Right.
another reason as
They
well. So
figured
yeah,
out how to
we've got a lot
track
of
it.
tax reporting. Yeah. Yep, that's right. So they're probably just wanting to take a little slice of the pie for themselves. But I also think it does help innovation as well, which is great. You can even get grants here in Australia as well for cryptocurrency, which is awesome. So the government, if you spend a lot of money doing research and development in cryptocurrency, they'll actually provide funds for that. They've got their own test net as well to do testing in blockchains in like Australian government endorsed, I guess, test environments and stuff for cryptocurrency, which is pretty cool. I think there's a lot of stuff happening here around that. Yeah.
That's good as long as they don't launch their own token.
Yeah, that's yeah, yes.
Stablecoin, yes, but token, no. Yeah, not to mention any names, but yeah. Um, all right. So since our show is about spilling the tea, it's all about, you know, spilling what is maybe not quite so public. What is one piece of tea or an exclusive insider update about Mooncat AI, whether it's an upcoming feature or a partnership or expansion that you can share with our audience today?
Yeah, I really think it's our data and data analytics layer that we've literally just launched, right? So, check out our X account, have a look at the cards that are coming out that are showing the true IL and drag on these pools and the APRs that are coming as a result, and the market analysis. It's all it's quite good stuff. And check out our website in a couple of weeks as we start putting the reporting layer up into the website as well. You'll start being able to actually interact with our data and see pool by pool and token by token analysis, and also some rolled up views if you're interested in that as well. So Definitely the data analytics layer first, and then we're focusing on our bot and our TEE in the TEE secret network environment.
Amazing. Okay. All right. Any last thoughts before we turn you loose?
No, I just wanted to say thank you, Lisa. It's been awesome. I really appreciate the time and being able to come here and talk about my project.
Yeah, well, it sounds like you're passionate about what you're building, and that's always great to see. So thank you for sharing that with us and with our audience.
No worries. Thank you, Lisa.
All right.